Now, using our chart, we see all-time high near $211 in November 2025 and recent trading in the highs of 170 to 180s. And so we have a broad picture over the past 12 months, and we see that in the long-term uptrend, Nvidia moved from prior multi-year consolidation into an aggressive uptrend in 2023 to 2025 as AI data center demand accelerated. Then the November 2025 ATH near 211 marked a clear peak. So the recent consolidation or pullback we see after the ATH price has pulled back and traded in a consolidation range. The normal healthy pause after strong move. Now, recent quarters produced blowout top line numbers, but price reactions were muted at times. But these signals investors are digesting evaluation and macro concerns, even as fundamentals remain strong. Now, when you look at the support and resistance, the psychological levels, the key resistance, we see the prior ATH near $210 to $212. Next resistance bands appear at 195 to 200, the round level and prior swing zones. The key support is between 170 to $175, where recent intra day lows clustered. Then a deeper structure support is around 150, the previous consolidation area. So these are working levels you'll want to mark. Yeah, so when it comes to the volume, which is the fuel behind the move, volume confirms moves. On our chart, we see whether the rallies are heavy volume, bullish, or light volume, which can be weaker conviction. Nvidia's big quarterly beats are historically coincided with volume spikes, but several post-earnings sessions trimmed gains as the profit taking occurred. So that pattern, big volume on the initial pop, then lower volume on follow-through, suggests the move is being digested, not necessarily exhausted. Yeah, so when you look at the popular technical indicators, what they are likely showing and why they matter. Now, moving averages, looking at the bull case, prices above 50 and 200, DMA with both MAs sloping up, the trend acceleration and higher probability longs. So we may expect that. Then in the bear case, if the prices go below 50 DMA and approaching the 200 DMA, this signals caution. So we need to watch for a weekly close below the 200 DMA as major regime shifts. Then coming to the RSI, Relative Strength Index, greater than 70 suggests short-term overbought, which is a possible pullback, and less than 30 suggests oversold, which is a potential rebound. For Nvidia, after explosive rallies, RSI often enters greater than 70, and corrections then pull RSI and offer better risk or reward entries. Now, the MACD line crossing above signal line suggests momentum is accelerating, and histogram tells us momentum acceleration versus decelerations. After big run-ups, MACD often flattens, so watching for a positive cross on the daily or weekly chart for confirmation. Then coming to the pattern recognition, what patterns to look for on Nvidia. Now, We have the continuous patterns and the reverse patterns and consolidation patterns. So if Nvidia builds a multi-week base tight range with the decreasing volatility and volume, the breakout above the base often leads to an accelerated move, which is a good entry point with a measured target equal to the base height. So if we come here, we shall see that the near-term support is around 190, 170 to 175. And then the structure support at around 150, we may have prior consolidation, long base, and deeper 120 to 130 if market wide risk materializes. Yeah, so coming to the conservative swing trade, for the entry, you wait for a delay close above 195 with above average volume. Then the stop, delay close back below 175, around 6 to 8% below entry, whichever fits your risk. Target, first target 210 to 220. Previous ATH area, then trail with a 20-day EMA. Rationale is to confirm breakout with volume, which protects against fakeouts. Now, for the aggressive swing, you buy the dip, can enter at 170 to 175 support on signs of buying pressure, the long wick candles, and the rising volume. You can stop close to 160. Then the target can be 195 initial, then 210 secondary. Here we are capitalizing on the mean revision within an uptrend. So now if you have options based on directional trades, the defined risk, bullish, you buy a 60 to 90-day call spread. Buy at around 180 call, let's sell at 220 call to cap cost. If you're bearish, buy put spreads if you expect a pullback. Buy at 170 put and then sell at 140 put. Here options let us express conviction while controlling the maximum loss. For the investor approach, um, the position size, and this here, your initial allocation, small starter position around 1 to 3% of the portfolio. Then you can add by dollar cost average and weakness into the 150 to 120 zones. Here I want to manage valuation risk while maintaining exposure to secular AI tailwinds. Now, the risk management. How exactly you can stop, size and stop, position sizing, risk only around 0.5 to 1.5 of portfolio per trade. Set mentally stop size accordingly. For the stops, prefer technical stops as clean close between below confirmed support or 200-day DMA breakdown rather than fixed dollar stops. Technical stops aligned to market structure. Yeah, so what are the catalysts and items to watch? Of course, fundamental events that move the chart. We have the quarterly earnings and guidance, still the largest short-term catalyst, and then the open air and strategic partnership deals. Any large partnerships or investment shifts materially influences narrative. Then the macro and the interest rates. And what are the probable paths that we could see? The base case, 40 to 50% probability, Nvidia consolidates in the 170 200 range for several weeks, digests earnings, and then breaks above 200 on strong volume, resuming the long trend towards new ATH. And this is the healthy digest and re-accelerate path supported by data center demand. Then the bear case, 25 to 30 probability percentage, market becomes risk off. Nvidia breaks below the 150 and we get a 20 to 40% correction leg as leverage unwinds. Then the volatile sideways can be 20 to 30% probability, repeated swings between 150 to 210 as investors trade headlines. Yeah, so that is it for now. Let me know your thoughts about today's analysis. Please like, share, and subscribe. And feel free to comment. If you want more like this, please comment the word more. And also, I wish you God's blessings and God's love. Peace.